Welcome to the fifth lesson on the basics in Forex fundamental. And in this lesson, we'll be looking at high impact news. Trust me, you would love this lesson. You would love this news, right? I'll be showing you some of the trades I took on this type of news, and I'll be explaining what they really is all about. Well, if you missed the previous lesson, I need you to go back and watch them, right? The first, second, third, and fourth. Because if you don't understand those lessons, you will not understand this particular lesson. So the high impact news. High impact news in Forex is something most traders run away from, especially those who don't even understand fundamental. I usually hear a lot of technical traders say there's news today, so I'm staying out of the market. I just laugh because we fundamental traders, we macro analysts, we understand how to trade those news. Why? Because we know the direction in which those news would go, and we make fast profit from it. Most times, some of us double our lot size once we understand the news. And I'll be showing you some of those news and how I took them. In this lesson, I'll be explaining those news as well, the short-term and long-term effect, and how you can trade it. So let's go straight into it. Well, in Forex, certain news events cause strong, fast price movement. This is called high impact news. This event usually relates to macroeconomic data release, central bank decision, or geopolitical developments that significantly influence supply and demand for a currency. Now, these news items are marked as red folders events, right, in the economic data, like the Forex Factory. Now, Forex Factory is not a site in which you can check some of these news events, meaning they have different colors: the orange, yellow, the gray, and the red. Now, the red folders are the ones in which have high impact in the Forex market, and they are usually the ones that have high volatility. You understand? They can be short or long term. You get? So meaning they often cause sharp volatility, especially in the short term. Do you understand? So let's go straight into some of this news. You can see some of them here. I just use this to illustrate. You can see some of the red one here. You can see some of the red one here, and you can see some of the names. You can see USD. That one will affect the USD pair. You can see the JPY. That one will affect the JPY pair, so on and so forth. These are very, very high impact news. The yellow ones are the ones in which don't really have much effect in the market, but you can actually trade it in long term, right? You can trade them in long term. Understand? But the red ones usually have a short-term effect, which you can see a spike in the market. Like the NFP, you see a spike. The CPI, you see a spike, right? Most traders run away from it, but we already understand where this market is heading to. We can read the data and understand where it's heading to. Sometimes you see numbers, but these numbers, there is more to it. There's how you can read these numbers and understand where the market direction is heading to. Do you understand? So let's go straight into that. Let's go straight into this. So economic data release. Now, these are scheduled reports for government institutions that shows the current state of an economy. Now, I want you to understand that these news are not really being released because of the forex market. They are being released because of the economy. The economy is simply using this data to, people are simply using this data, to know the health of an economy. You understand? So it's not even about forex. Most times it's not even about forex. It's just simply about the health of an economy. But like I said, the health of an economy impacts the health of a currency. And in forex, we are trading currency pairs. So if it impacts the health of a currency, the currency will either get weak or strong. And in the process, it will affect the forex market. It will affect you traders. To either hit your SL, or if you're good at it, it will hit your take profit. You understand? So key example of this news is the non-farm payroll. Like I said, non-farm payroll tells you the data of employed people and unemployed people in a particular month. It is being released every first Friday of the month. That is when it's being released. I hope you're taking note of these things. Very important. Be taking note of them. So the CPI, like I said earlier, measures inflation. You understand? So if CPI come out good, it means inflation is not really high, which is good for the economy, is good for the currency. GDP is like gross domestic index. It measures the overall growth of an economy. So all these things are news that you see that are being released, and if it's being released, it will affect the forex market. It will affect the currency. Do you understand? So unemployment rate, retail sales, PMI. PMI is actually one of the news that most traders don't even know about, but this news is actually very, very good for long-term trading. Long-term trading means it might not really impact the market, but you can use the data to understand where the particular currency is heading to in the long term. You understand? So let's go straight into more of this central bank announcement. Now, central bank announcement, like I said, is like when central bank decide on interest rate decision, monetary policy. That's just what I'm simply talking about. So whenever I say monetary policy, no, I'm talking about the central bank announcement. So the FOMC statement, also part of the central bank announcement, the press conference from central bank leaders like the Powell. You can know, some of you know of Powell, people who usually post meme that an old man will come to the stage and say good afternoon, and once you say that good afternoon, it will hit your SL or it will hit your TP, or you see a huge spike in the market. That person is Jerome Powell. Now Jerome Powell is part of the Fed, which give announcements on interest rates, and this in return affects the forex market. If you understand where this news is heading to, most times is during the FOMC meeting. If you understand where this news is heading to, you can understand what currency pair or what direction you're going to be trading in that currency pair. I'll show you some of the news in which I took on this, FOMC meeting. Trust me, you'll be amazed, very, very amazed. Beautiful trades. So, geopolitical events and crisis. Now, war, military tension, election, and political instability can affect the forex market as well. Trade war, sanctions, and national disaster or pandemic. During the COVID-19 period, it affected the forex market. People who understood fundamental, unfortunately, then I did not understand fundamental. That was 2020, I guess 2021, 2022. I learned fundamental 2023, 2024, up to 2025 right now. So I learned fundamental for 3 years, but I didn't learn it during that period. But people who understood it during that period, they made a lot of money from the forex market. They already knew where to focus on. They focused on risks of currencies, and risks of currencies are currencies that do well during economic crisis, during pandemic, during trade wars. You understand? All these things are long-term news events that affect the market in the long term. So you can trade based on this news in a long period of time. So let's go into the explanation of this long-term and short-term. Understand? So long-term and short-term effects of high impact news. Well, short-term impacts, right? These are immediate reaction that occur within minutes or hours after the news release. Price may just spike, reverse sharply, or you experience high volatility. Now, short-term impact news is like the NFP, which is just being released. Immediately you see a reaction. You understand? Like the CPI, immediately you see a reaction. So the NFP often give like 50 to 100 pips movement within a second. You understand? So this is the thing that most traders are running away from. Something that give you 100 pips movement, 50 pips movement. Are you supposed to be running away from it? That's because you don't understand from the fundamental. If you understand it, you won't be running away from it. Interest rate hike, which is the FOMC announcement, often cause a surge or drop in currency value. Well, interest rate FOMC news, this one you trade it after the news has been released, and I'll show you type of trade I took based on the FOMC news. And then the CPI, if the CPI data is unexpected, it will cause a reaction in the market. So sometimes you see CPI will be released and it's not causing any reaction. That's because the data was expected. I don't know if you understand me. Whenever the CPI data is not expected, whenever it's like a surprise, it will cause, to cause a spike in the market. But if it's not surprised, if they predicted if they forecast, they predicted it, and they predicted that inflation is already rising, it might not really affect the forex market. Do you understand? So the key tip is these moves are often driven by algorithm and large institutional reacting instantly to the numbers. So whenever they see the numbers, whenever they see the result, investors buy the currency. You understand? They buy that currency and you see a big reaction. So that's just simply it. Let's go back to the long-term impact. Now, long-term impact are some news events which continues to affect the currency trend for weeks or even months. That's why it's called long-term. And these ones are the ones in which you can use this news report to trade the market in the same direction for weeks, for months, and you'll be making your profit. It's not like the NFP that will just give you one spike and all of a sudden it has ended. No. Long-term news events are changes in monetary policy, like the hawkish or dovish swing. Like I said, hawkish is when you're saying there's a hike in interest rate, which is good for the currency, making it bullish. Dovish is when the interest rate is dropping, making it bearish. So monetary policy, if you're looking at it, if you understand where they're heading to, you understand where to trade a particular currency pair. So if you see persistent inflation or recession fear, you know the direction to trade a particular currency. I'll be teaching you all how to read this in intermediate section. You know how to trade long-term impact news. You understand? So political or economic shifts, all these things like the China trade war and the rest, you see people trading gold. Also, I'll be teaching you all how to trade gold, how to trade JPY, how to trade BTC in the expert section. We have intermediates, we have experts, we have professionals. So all these things are loaded in the class. You understand? They are loaded in the class, and this is just the basics. And these basics, I guess I'll just be giving it out as for those who are attending the boot camp. You understand? So if you're interested in knowing how to read all this news and knowing how to trade them, you know what to do. You have to join the winning team. So example of this is the outgoing rate hike by the Fed, sustained by the USD strength. Also, you have geopolitical conflict like the long-term weakness in that affects the country's currency, and you also have stable economic growth in a country, which is a also long-term effect that impact the forex market. And with this data, you can know the direction of a particular currency pair. Right now, let's go back to some of the trade I took based on this news. You can see this is NFP, and I took the trade on AUD USD. If you zoom in, you look at the date above, but I don't want to zoom in right now. You can see, so the news came out positive on US, which means more people were employed, making USD strong. You can see this was my entry, right? And the market, all of a sudden, once the news was released, the market spiked into my entry and dropped massively. You understand? And I made good profit from the trade. This was me trading NFP. I think this was 2024, right? September 2024. If you zoom in, you see the date. So this was me trading CPI USD card. This was one of my favorite trade. I actually doubled my lot size on this pair. I will not lie to you, because I knew the direction of CPI before it even came out. So CPI news came out positive, which means inflation was on a good level in US, which made USD more gain more value over USD card, which made USD card buy. I would have put buy there. I don't know why I put sold. I think it's a mistake, because I put AUD sold here. By correcting it, I put USD card sold. Well, USD card bought. You can see the massive big white candle that formed after that. This was my entry and this was it. So that was just simply it, and that was how I took the trade. I made my huge amount of profit from this trade because I understood where the fundamental was heading to, where the CPI data was heading to, and it was just a fast spike. This is a short-term news analysis. Now, for the long term, we had the USD JPY. This is FOMC news, and this is the 3 hours time frame. This trade kept on selling drastically, but I just left it because the profit was massive. So FOMC news meeting, and it came out positive on interest rates for US, and which made USD gain more value, and this made USD lose value, and USD JPY sold. I don't know why I made so much mistake on this. So when the FOMC meeting came out, it made USD lose value and JPY sold. USD JPY sold. Why? Because USD lost value. So you can see this was why I took the trade. You can see this was my entry, and this was the entry over here, and the market ranged a bit before getting there, and all of a sudden, boom, gave me my profit. So the FOMC meeting came out, and the interest rate was weak on US. You understand? Interest rate was weak on US, which made USD JPY sold. So don't look at this error. This is an error. This is just simply an error. Don't really look at this. Just jot down what I said right now, because I said since the US interest rates came out weak, it made USD lose value and USD JPY sold. Do you understand? USD JPY sold. JPY was stronger than USD. That's why it sold drastically. So let's go into more. You can see trade on economic crisis during economic crisis when they announced the war against Russia and I think Ukraine. This was the news release. You see the spike, see the lot size I used, 0.15. I think I doubled it. I doubled the 0.15 two times. I placed the trade. You can see I've already traded my positive SL, and the market went straight down massively. Do you understand? Massively. So USD JPY sold. Why? Because US economy was in an economic crisis, which made USD weak. So it sold after the release of an economic crisis, which made USD lose its value. I guess I wrote this one perfectly well. You understand? So take note of this. This is how economic events affect the forex market, and this is a long-term economic events. This one on economic crisis. Economic crisis is a long-term event. FOMC news is a long-term event. NFP is a short-term event. CPI is a short-term event. So that is how it's being done. With the long-term events, you can keep on holding a trade. I can tell you that this USDJPY kept on selling massively. You can see I didn't even say take profit. I didn't say take profit. It just kept on selling massively. That is simply it. So, key takeaway: high impact news events move the market fast and hard. Learn to understand not just the number, but also the meaning behind it. That's how you predict if the move will be temporary, which is short term, or if it will be part of the big trend, which is long term. And that's what gives you the edge in fundamental trading. I've showed you evidence that fundamental analysis move the markets, like move the market drastically. You understand? So I hope you understood this lesson, and in case you have any question, make sure to DM me and ask me. I'll be willing to answer you. For the meantime, have a lovely day. Here's my WhatsApp contact below. You can see it here just below. So ask me your question in case you have any question, and for the meantime, have a lovely day ahead.